Here's some controversial advice around life insurance. So many financial coaches and influencers think that permanent life insurance, aka whole life insurance, index universal life insurance, or IULs, are garbage and just bloated with fees and commissions. In some ways, there is a case to be made that has some truth to it. The challenge is, if you have not worked directly in the financial industry, you don't have access to all the information because the carriers guard all that info. And so I'm a fan of having some permanent insurance if appropriate. So what do I mean? The challenge is that people on the other side of the fence say, oh, well, you can't get a similar rate of return to stocks, therefore it's terrible. But the reality is life insurance invests in bonds, not stocks. So it does have a comparable rate of return to bonds with Roth-like tax treatment. And unlike bonds, the cash value doesn't go down like it did in 2008 with bonds. So you have guarantees. So what I like to consider is maybe, assuming you've checked other boxes, like you have an emergency fund, you're out of credit card debt, you are stacking and building wealth and looking for other areas to build wealth in, at that point, it might make sense to put some of your wealth into a whole life policy. And here's why. Because if you think about your overall allocation of investments, maybe instead of having 80% stocks, 20% bonds, you have some of that bond portion as life insurance. Again, similar rates of return, better tax treatment, guaranteed instead of fluctuating, and you can borrow from it with additional advantages. So again, food for thought. Let me know in the comments, do you think that that's a terrible idea, or do you think that whole life insurance is God's gift to humanity?